Okay, so we will start, then we have to continue. I suppose answer keys then and there you are noting it so that you don't have to hunt for it at all. It will be very clear. This also be completed, no? Rapid fire. Okay. Even graphs we have done a bit. Yes, my dear students, the formula slide is one important thing which you have to constantly revise. To gather all the formulas at a stretch, you have to revise. And who is ready to read this formula from the screen? So that in the meantime, others will take down the formula set. Because when you're going to do revision of cost topic, remember all formulas together you give a continuous reading. I mean, not like a broken by theory, then graph, then table. No, set of formula together. Who's ready to read from the board? Yes, Nityashri, you will do it. Yeah, please read. Others will take it down. Yes.
Cost equal to expressing cost plus increasing cost. TC equal to total fixed cost plus total variable cost.
Okay.
AC equal to AFC plus AVC.
Okay.
AC equal to TC by Q.
Yes.
Or AC into Q equal to TC.
Okay.
AFC equal to TFC by Q. Or AFC into Q equal to TFC.
Fine.
AVC equal to TVC by Q. Or AVC into Q equal to TVC. MC equal to TVCN minus TVCN minus 1.
Do you notice that? Variable cost component. MC has variable cost component. Okay. Then.
Sigma MC equal to TVC.
Yes. So all these formulaic expressions will be helpful to you in some form or the other. Let it be numericals. Let it be a question on the formula itself. Right? And for numericals, when you have to work out, say, TFC from AFC given, then from the given data, when you have to work out, these formulaic expressions are very helpful to you. Actually, when I was doing the class itself, I was telling you that please have this formula slide in fingertips, which will be helpful for preparation in the examination. Is that fine? Have you taken down all the formulas? Everything is taken down? Okay. Now let's move to the next one. Yes, you are yet to do. Yes, do it. See, look at this dedicated girl. She is focused on her work. Okay, let it be. No, she is not. She is learning math. Have you completed taking it down? Yes. Can I move on to the next one? Okay, then that's fine. So we are going to just have a look on average fixed cost in specific. What are the core points I should know on AFC, because there could be a separate question on average fixed cost. So take down the core points. First one is AFC curve is a rectangular hyperbola. You know the reason why? Because AFC is equal to TFC by Q. Fixed cost component will remain the same. It is only the variations in the quantity, the denominator, that changes. So the reason for defining AFC as a rectangular hyperbola is a complex question which you may not answer, may or may not answer. So in economics, because AFC is calculated or computed as TFC by Q, you give the term rectangular hyperbola. And look at the explanation we have added for you. As TFC remains fixed at all level of output, with the rise in the output, AFC will definitely fall. Because TFC is going to be constant, the quantity alone is going to increase. So naturally there will be a fall in AFC. To indicate that, we are using the mathematical expression of AFC being a rectangular hyperbola. Do you get that point? It is coming under complex questions, intricate or unexpected question. So I know what is the AFC, I know the shape of AFC, but do I know why it is called as a rectangular hyperbola? Because of the declining nature of AFC, and as you very well know that fixed cost will remain constant, with quantity alone changing, you will have a declining AFC, and there we use the term. So the curve will be like this, and look at even the graph which you are showing here. Now, since TFC is never zero, AFC curve doesn't touch the horizontal axis. So we understand these points are coming under intricate questions. So because the TFC is never zero, your AFC will not touch the horizontal axis. They may ask you in correct and incorrect sentence. AFC touches the horizontal axis. It does not touch the horizontal axis. So why does it not touch? That also we have added, because TFC can never be zero. Thus, the shape of the AFC curve is rectangular hyperbola. And for some of them who wants to know how a rectangular hyperbola is a curve under which all rectangular areas are equal. That is how it has to be drawn mathematically. So it is a curve. Rectangular hyperbola is a curve under which all the rectangles are of equal sizes. And in economics, when the elasticity of demand is equal to 1, unitary elasticity of demand, there also we bring in the rectangular hyperbola case. So this is completely on AFC, where the questions can be unexpected or once in a while type of question. So why is AFC curve a rectangular hyperbola? So what is the reason for it? Or will the AFC touch the horizontal axis? Or is it is unitary elasticity of demand depicting rectangular hyperbola case? Yes. So all the three answers are given in this particular input. And this is how your diagram is. Right? So ED is equal to 1 at point B, ED is equal to 1 at point A. So that again we define as a rectangular hyperbola, where the rectangles below the curve are of equal sizes. That is a mathematical definition. And in economics context, we use a rectangular hyperbola to define your EFC curve and all AFC curve, and also unitary elasticity of demand. Are you clear? Have you jotted down the main points here? Yes? Yes? Okay. So remember the graph. If anybody wants to have this rough graph also, how you have to have it in mind, a rectangular hyperbola should be constructed. You can also have this curve for your reference. Okay. Now, this is one template question paper. Questions collected from it. Please do it. It may be repeated, it may be new, but it was taken from a question paper to just check your strength on cost analysis. Dash refers to what the entrepreneur who undertakes a business has to pay prices for the factors of production. Dash equal to explicit and implicit cost. The efforts and sacrifice of the factors or its owners is the dash. Dash calls real cost as social cost. According to an dash, the money cost of producing a good includes only those costs which are directly paid out or accounted for by the producer. The dash cost of paddy is a value of sugarcane which is sacrificed or lost. Dash costs are those which are incurred once and for all and cannot be recovered. Interest on capital is an example of dash cost. Payments for labor is an example of dash cost. TC is equal to TFC plus dash. So this is from a template question paper. See whether you are able to fill it up. Have you written the answers? Supposing you give a particular term and the alternative name is the answer, fine. Because alternative name implies the same concept, no? For example, implicit. In the place of implicit, if you have given imputed, no harm. You have understood the question. So that doesn't matter here. But whether you are able to follow the question, you are able to understand the question. You have completed or you're doing? Okay. So shall we go for the answer key? I think in today's class itself, we would have studied cost analysis, almost various parts of it. Finished? Yes? Finished? Shalini, very good. Others? Almost over, no? Okay. Now, let me give you the answers. Please check your answers to find out whether you have understood the question properly. What happened suddenly, both of you? TFC plus dash. Oh, you didn't notice that question at all. Very good. Yes, Dheeraj.
Yes,
Have you completed?
yes, last one.
Last one. Yes, here is your key now. Please check. Money cost refers to what the entrepreneur who undertakes the business has to pay as prices for factors of production. This is a twisted sentence. We are inclined to write opportunity cost, if I am right, isn't it? So please note, entrepreneur wants to undertake the business, but what is he doing? He has to pay prices for the factors of production, which will come under money cost. They are deliberately using the term entrepreneur. For you to see, any entrepreneur will undertake a business and he has to pay for the factors of production. That is explicit. That will be entered in the books of accounts. That's an outlay cost. That's a money cost. So they are giving you, using the word entrepreneur to misguide you. I mean, it's a twisted question. Literally not misguiding, but checking. So how will the question be asked then? If it is implicit cost, how will it will be entrepreneur who contributes its own resources. Okay, and the entrepreneur has to be paid for the contribution of his own resources for the business purpose. That will be your implicit cost, right? So this is money cost. Again, second one, I think we have done umpteen number of times. I don't think anybody would have made a mistake in this. Is there anybody who made a mistake? No, isn't it? Third one, real cost, isn't it? This also I told you. Anybody made a mistake in this? because I told don't be deluded by the term sacrifice to write opportunity cost. Look at the term efforts. This question I saw in 3 or 4 papers. So please make a note of it. They will very clearly want you to understand the difference between real cost and opportunity cost, right? Then Alfred Marshall calls real cost as social cost. He is the one who calls that. According to an accountant, the money cost of producing. How many were able to write this?
Accounting cost.
According to an,
I didn't write accounting.
but you understood the thing, right? Is there anybody who wrote economist or something else? No, isn't it accountant? Okay. Next is the opportunity cost of paddy. Is a routine kind of a question. They will only change the name of the crop. The opportunity cost of paddy is the value or tons of sugarcane which is sacrificed or lost. Sunk costs are those which are incurred once and for all and cannot be recovered. Interest on capital, repeated question, is an example of fixed cost. Payment for labor is an example of variable cost. TC is equal to TFC plus TVC. Why this last question was given? No, because they can ask you directly on formula itself. Instead of numericals, a formula question itself they can ask, right? So this is what I want you all to enter and hope you have recorded the right answer. Is anybody who got everything correct? How many questions were there totally? 10. So 9 on 10. Okay, where did you all miss? First question, Alfred Marshall. Accountant. Okay. 8 on 10. Where did you miss? Accountant. So 8 on 10. 7. 6. 8. Good one. Now you fill up this. 3 questions are there. I think 3. The diagram refers to dash cost. Second one is, first one alone is graph question. Second one is dash refers to cost per unit. What is cost per unit? AFC is a dash hyperbola. Dash cost is equal to delta TC by delta Q. Repeated questions. They are not complex, they are repeated. Finished? Yes? Really? Okay. Finished. Okay. This diagram also I made you draw, I think, in the class. You don't have time to look at any chapter during the examination. Just look at your revision notebook and some fundamental things at least go through, instead of totally negating the topic for want of time. See, it's not that you are choosing and doing it, but I think you noted down the weightage also, no? The first day, for day 1, weightage was given to you topic wise.
Yes.
So now look at the answers. This will be your attitude. Easy questions only, we know it. So the above diagram refers to semi-variable cost. Average cost refers to cost per unit. How many of you got the second one right? Average cost refers to, okay. Third one, AFC is a rectangular hyperbola. MC is delta TC by delta Q. Okay, so we are, I think, ending the segment with easy question. Okay, you have now this box type. Fill in the question marks. In the class also you did, no? One big table. So the table will be given and you have to fill up. You have the first column is output. Don't mind the alignment, with great difficulty I did it. So output 0, 1, 2, 3, and TC column for 0 it is 200, for 1 it is 250. You have to find out for 2. Okay, and the third level of output you have TCS. For all the 3 levels of output it is total cost is 320. Alignment is little problem, but I am just reading. So for 0 level of output, your TC is 200, MC is dash. Okay, being the first one. For 1 unit of output, TC is 250, MC is 50. For 2 units of output, TC is a question mark, you have to find out, and MC is 40. And for 3 units of output, TC is 320, MC is a question mark. Yes? You are filled up? Yes, filled up? Everybody? Can I give the answers now? Okay, what are the answers? 290 and 30,
30.
right? So how did you get 290? Tell me. 250 plus 40 you got. And how did you get 30?
320 minus 290.
320 minus 290. Fine. Now, from this diagram, you have to locate the plant curve and planning curve. I need not have to say that you have to at least roughly draw this graph. Because since morning, I've been telling you that plant curve and planning curve is an important question. Kindly, at least in a rough way, keep this sketch in mind. How does a plant curve look? How does a planning curve look? Right. Now, you also have to identify from the graph which is the plant curve, which is the planning curve. Okay. Draw the graph and after that, give me the answer. This is the graph based question, but I want you to draw the graph now. LAC is also known as envelope curve. Remember that it envelops a family of SACs. That's one important because they forget the term envelope. Very quickly draw the graph without wasting time so that you have an idea and this will also get registered in your mind. No? Okay, this is what is it. Have you drawn? Yes. And below the two graphs, write down the answer. Okay, write down the answer. Below the respective graphs, write down the answer. The first graph is planning curve. The second one is plant curve, right? So this is planning and this is plant. Okay, so draw. I suppose everybody has drawn it. First one is your planning curve. Second one is plant. Plant is SAC. Planning is LAC. So this is called as boat shaped, flattened U, etc. Right? And SAC is always U shaped. Okay. Revenue. Revenue analysis. This topic looks very small, so you may also want to skip it, but you cannot. If you think that you can skip it, it's a very wrong notion. As I've been repeatedly telling you, cost and revenue curves are prelude topics for market structures. So just as you prepare for cost, you have to prepare for revenue, but the content of revenue topic is very less compared to cost analysis, right? So I'm giving you a small table, how you have to remember revenue with pure or perfect competition and monopoly, right? This is, and we go to the exercise directly. Please write down the answers for these questions. Average revenue is also known as dash. AR curve is also known as dash. Total revenue curve is dash sloped. AR curve is also known as firm's dash curve. AR is a revenue earned per dash. AR can be symbolically written as, you have to write the formula for AR. Total profits are maximized when. And last one, I give you a small numerical also. If the seller obtains rupees 6,000 after selling 50 units and rupees 6204 after selling 53 units, then MR will be. My dear students, in revenue topic also you have total revenue, average revenue and marginal revenue, right? Like total cost, average cost and marginal cost. The principle is the same. Only that this is sales, selling, and cost is an expenditure. This is a revenue, receipt, If you answer this, it means that you have studied a revenue topic properly. Otherwise, you have sidelined it, being a chota topic. What happens, Ashidharan? You and Bala are in some bliss. Yes, what is that? Shall we know? Are the questions very simple for you? A giggle for everything. What does it mean? You never expected that we'll come out of cost analysis, yeah? These people are giggling, yeah. But I don't understand for what. Completed? Not yet. Okay. Mark these set of questions as very important. Very important for the examination. For revenue, you can revise this set of questions. Previous table is also important, what I showed you, in revenue. But anyway, we will go into graphs a little later. Yes, completed. Nitya and Ramya. Finished. The other one, there's one more Nitya also. No? Here. Nisha. Yes, Pavitra completed. Is this difficult or moderate? What do you feel? What is the meaning of this dead silence here? Vishal, Maharaja, how you people feel? How are these questions? Give your expert opinion. Little bit difficult. Means that you have to work hard on revenue topic. Do you understand that? Small table and one graph only will be there for revenue in books, but questions will be testing your understanding of that concept. And revenue will be taught with respect to different markets. Perfect market, imperfect market. That is how we have to study revenue, which is not there for cost. For revenue, perfect market, imperfect market. Can you understand that? It's very important. Shall I release the answer key? Did you all attempt it? All of you? Yes? Okay. Average revenue is also known as price. If you have written the answer, tick mark. Okay. AR curve is also known as demand curve. These two are repeated question. Total revenue curve is positively sloped. It's an unexpected question. Like generally they don't question much on TR curve actually speaking. AR is also known as a firm's demand curve. Yes, correct, perfect. AR is revenue earned per unit of output. It means output sold, not output produced, output sold. Okay. AR can be symbolically written as TR by Q. Total profits are maximum when TR exceeds TC. Okay, total profits are maximum when TR exceeds TC. And the last sum, did you all work out?
Yes, ma'am.
What is the answer you got?
68.
68. Perfect. 8 questions, no? Any 8 on 8? 7 on 8? 6? Very good. 5? 5 and 6 permitted. So note down the correct answers. What is AR called as? What is AR curve called as? That is their symbolical representations, formulaic expressions, numericals. I suppose you have taken down. So look at the AR curve. Positively sloped will be given like this or like this. Whereas these are negatively sloped. That's what I want to show you, the meaning of positively sloping TR curve in these two graphs, and you have downward sloping AR curve. Now, please identify the market forms. Yes, Maharaja, you have a doubt there. Please draw the diagram and identify the market forms. The market forms are here. You are going to identify it. Draw it and identify it. Let me see whether you have noted the subtle thing strongly told in the class. Both are downward sloping. In both the cases, MR is below AR. You see this? Shashidharan and Balasubramaniam are in some jovial mode now. You want to create some icebreaker in the class, like first class is going very serious, and the four boys sitting in between you, he has to receive your giggles. Better both of you come sit next, and he will go this side. See how silent he is. In the pause only I should. Okay, did you identify or not?
Yes, ma'am.
Okay, what is the first one?
Monopolistic.
Very good, yeah. It's very good answer. Second one is?
Monopoly.
Okay. How did you differentiate on what ones? Okay, what does flatter and steeper mean?
Flatter means flatter, steeper.
No. Yeah. Give that economics rationale. Flatter implies more elastic. Cheaper implies less elastic. Right. And in monopolistic competition, large number of sellers are there. So if not one brand, I go for another brand. The choice is not there for the consumer in a monopoly market, which is supposed to be dominated by a single seller. Okay. And when question is, the seller is an individual or an organization or both?
Both.
In monopoly market.
Single organization also.
Organization can also be monopoly.
Single organization.
Single organ, yes. So it can be an individual, it can be an organization, it can be a government, right? Okay, so note down the answers below the diagram. So the flatter AR curve represents your monopolistic competition, and this represents your monopoly. Okay, good. Again, identify the market forms, draw the curve, draw the AR curve, and draw the both the curves, and write the answer below. Again, identify the market forms. What type of questions are asked in AR is, revenue topic is concept based, numericals, graph based. And here the graph, remember in revenue analysis, graph for a competitive model and imperfect model are different, which was not there in cost analysis. Are you clear? Why this identifying the market form comes? Because you have a different elasticity in different markets. Okay. Draw the two diagrams and write the answer below. Finished? Very good. All of you are finished?
Yes,
Okay. Now what is the first one?
competition.
Very good. Second one is?
Monopolistic.
Yes, monopolistic competition. We have given it as a flatter one. A little steeper one would be monopoly. Right. So this is a perfect model. This is an imperfect model. It can be monopoly or monopolistic competition, but we have given you a flatter AR curve. Right. Now, can you tell me why AR is a straight line parallel to the x-axis and AR equal to MR? That is one typical thing.
Uniform price.
Yes. Uniform price and homogeneous product is the reason for this. Can you understand that? And here, the theory behind imperfect model is as the price goes up, output commodity demanded will come down. Isn't it inverse relationship? That is what we show in imperfect model, right? That's why it is downward sloping in nature. So I suppose you have taken down the market names below the diagram. Okay. Now do this rapid fire round in revenue analysis. Just as you did a rapid fire round in cost analysis, you are going to attempt a rapid fire round in revenue analysis. Okay? Yes. AR curve is flatter in dash market and steeper in dash market. Most expected question. AR curve is also called as dash. MR of nth unit is given by dash. The amount realized by the firm by selling certain units of a commodity is called as, we have given you 4 options: AR, TR, MR, cost of operations. Options are there, you have to choose the correct one. Next 2 are numericals. ABC Limited realizes total revenue of rupees 6,000 by the sale of 120 units and 6050 by the sale of 121 units. What is the AR, average revenue, when ABC Limited sells 121 units? Next one, assume that when price is rupees 20, the quantity demanded is 9 units. And when price is 19, quantity demanded is 10 units. Based on this, compute MR, resulting from an increase in output from 9 to 10 units. Last problem is said to be a little unexpected or complex, not the usual type, right? So think all this just requires your thinking and attempt this rapid fire round. Attempt these questions in the rapid fire round, taking your own time. See, general tendency of the student, no, amongst demand and supply, they'll be thorough in demand. They'll leave supply. In cost and revenue, they'll study cost, they'll leave revenue. It happens so, actually. From your faces, I can understand that, you're not that confident in revenue as cost. But let's see, it varies from individual to individual. Completed? Very good, yeah. How many of you are still doing? Raise your hands. All completed. Huh? Did you work out the two problems? All of you completed? Okay. So let me release the answer key. First one. Okay. No, this is the answer is AR curve is flatter in the monopolistic competition. Okay, and steeper in monopoly market. AR curve is also called as
Demand curve.
a firm's demand curve. Okay. Yes. MR of nth unit is given by, this is the answer, TRN minus 1. So MR of nth unit is given by, so that formula, not delta TR by delta Q, it is a TRN minus 1. Then the answer for this is, what is that? ABC Limited, did you get 50? And what is the answer for the next one? 10. Please look at the workings if you want. So you are having the original price, original quantity demanded, new price, new quantity demanded. We work out the change, minus 1 plus 1. We calculate the total revenue from the price and quantity demanded. The original it is 180 and the new it is 190. So the change is plus 10. So MR is equal to change in delta TR by change in quantity, which is 10 by 1, which is 10. Okay, for you to have these workings, now note this problem as important. It is expected the thing, because they are adding this quantity demanded phenomenon also and giving you. So one sample I wanted to give you with the workings. So that is why I expect everybody to take it down. The other problems which you did in revenue is the usual type. You know, calculating TR, AR, MR is the usual one. But this is an different one which you have to have. Okay, are you clear? Yes. Take down the table will be, first column is output, and you take down from 0 to 9. Take down from 0 to 9 output column. From 0 to 9 you take down the output column. Have you taken this working, those who need? Then next column, mark it as AR. Okay, AR, and take down the numbers I give you. First one is dash, next is 10, next is question mark, next is question mark, then 7, then 6, then question mark, then 4, then 3 and 2. In TR column, next one is TR column. Take it as, starting one is 0, next one is a question mark, next is 18, then 24,
18.
question, yes, 18, 24, question mark. So it is starting with question mark, 18, 24, question mark. Then again question mark, then 30. Then question mark, 24. Then question mark. Okay. Third column is MR. Did you get the data correctly? Have you taken down the data correctly? Third one is MR. MR, first one is dash. Next one is 10. Next one is question mark. Next one is question mark. Next one is question mark. Then 2. Then question mark. Then minus 2. Question mark. Minus 6. So calculate this, do this fill up as one exercise, no? It will be for you. You finished, huh? Very good, yeah. Simultaneously. Remember, TR is AR into Q. You know that, no? Price into quantity. That's why we learned AR is also price. It's also AR curve is demand curve. And MR you can use delta TR by delta Q or TRN minus 1. Isn't it? Completed? Okay. Everybody is completed? Okay. Now in the AR column, we said first is already dash. Then the AR column will be 10, 9, 8, 7, 6, 5, 4, 3 and 2. TR will be 0, 10, 18, 24, 28, 30, 30, 28, 24, 18. Then your MR will be 10, 8, 6, 4, 2, 0, minus 2, minus 4 and minus 6. So this particular table, this is not for numericals, I mean simple numericals, but when MR is 0, when TR is declining, what is MR? That easily you can register from this chart. And this will be applicable to TR, TC and AC as well as MR, TR and AR, right? For understanding that, please use this table to know what will be MR when TR is 0, what will be TR when MR is maximum. For that, please make use of this reference table. Can you understand that? Okay. Now, do this one. Correct and incorrect question and revenue topic is a very complex exercise because mostly all the 4 will seem to be correct. So, I am giving you this as a model question as to how correct and incorrect sentences will be there. Because all the 4 statements you keep on reading, everything will sound correct. Here they are asking you to identify the incorrect one. So, go through all the 4 and see what is incorrect and write down the answer. I want every answer, every point in the revision class useful to you to be jotted down. Somewhere subtle will be the hint. The answer hint will be very subtle. It will not at all be apparent. It's not explicit, it is implied. Don't you find everything appealing to you? So then write down the answer, correct answer. Write down the correct, incorrect answer, incorrect statement. Got it? Found out. Huh? Everybody, Sasidharan, you were in a glory of happiness. What happened to your joy now? Have you noted the answer or thinking? Everybody is completed, huh? Yes, completed. One reference for revision material. We'll give you one thing. I mean, there's one revision material for you. Capsule. It's called as capsule. Capsule is a format by ICAI. What is very important, no concept, they will make it as a small, abridged kind of a note, like a leaflet. This big book will be given in a very small. You have that. I think this is your capsule only. Okay, what is the correct, incorrect statement? Option?
D.
Why do you say D? Is it not a summation of average revenue?
No,
What
ma'am.
is it? TR is a sum total of? The wrong answer is this. Correct. Okay. Anybody chose any other option? No. Okay, we are into market structures. Okay. We are happy to enter into market structures. Put the heading as, now draw your line and write it as market structures. The heading will be market structures. Taken down the heading. What happened? He is disturbing you. Okay, now let's move on to this market structures. Revision tips. Please remember, it is one of the lengthiest topics, as you very well know, and questions from different segments come in different batches. It is not the same set. What you see year before and what you see the year after will not be the same set, because the chapter per se has so many segments. Look at the segments. We begin with types of markets with examples. Types of markets. The first chart, general classification of markets based on several factors. Right? So it is not where competition is one criteria, but a set of factors. You remember those, starting from geographical location, regulation of markets, then volume of a business, nature of the transactions, time factor. You remember? So that general classification of markets with examples is the first thing you have to study. Then market in economic sense. This is one market as very important to you. Market in economic sense versus common parlance or common man's usage, that is always tested. Then types of markets based on competition alone. From the general criteria you take competition and that subdivision as perfect and imperfect with examples. And then the term, each market has a term. What is how is from where is it derived, the meaning of the term as such, isn't it? If it is oligopoly, what is oligos, polane, etc., right? And features will be a little difficult unless you study properly. Types, each market has subtypes and all, and there will be highlight feature. This highlight feature is often tested. I will make you everybody write down the highlight feature of each of the market form in a couple of minutes. Okay. Then equilibrium conditions, repeated question. Profit and loss conditions, repeated question. Graphs and models of major market forms. I think models which I sent as PDF, I'm sure, I'm 100% confident that you would not have seen it. So I want to show it in the board, in the class itself. You saw, very good. I'm clapping for you. Anybody saw? It's about oligopoly models. Once or twice they have questioned and people were not aware of it. So we have taken that and given to you. So that is one thing which I'm going to. That's the meaning of the term models with the name of the expert which is given. So my dear students, have you noted down the preparation tips for market structure? It's one of the biggest topics, and segments they shuffle. If they ask you from types, general classification and equilibrium, next time they ask you with competition criteria and graphs. So they keep doing it. So prepare in this particular, when you revise, do a revision of cover all these segments. Yes, have you taken down the revision tips? Can I go to the next slide? Yes. See whether you can answer the first question and look into the second question. That is definition of market in economic sense, which is very a fundamental question. I told you, conceptual knowledge, that is where you have to understand. See whether you remember who gave this definition. Because this economist specifically said that market need not be interpreted as a geographical location, which a common man would do. In economics, a geographical place is not mandatory to define a market. If so, what are these elements? Please take down these elements. Repeated question. Elements of market in economic sense. I want everybody to take down, answer the first one, or if you need time for the first one, read the first definition and give the name of the economist. Second one, mandatorily you have to take it down, because this is the definition of economics this is the definition of market in economic sense. Buyers and sellers, product or a service, bargaining for a price, knowledge about market conditions, one price for a product or service at a given time. These are the requirements. Geographical location is not mandatory. So you remember, in economics, market is an institutional arrangement. Isn't it? It's an institutional arrangement where transactions have to take place. Buying and selling has to take place. Exchange of goods have to take place. And the rate at which they are going to exchange depends upon the bargaining power of the respective players. Either the sellers or the buyers may win in a transaction. That depends upon the bargaining power. And finally, one price is quoted at which your goods are sold. So price is mandatory, bargaining power is mandatory, two parties are mandatory, goods and services are mandatory. Can you understand? But not a place. That is economist perspective or interpretation. Okay. And the first definition is important because it goes with the economics notion that market does not denote any particular place. So one of you read the first definition. In the meantime, others would take it down and give the answer. Who is going to read from the board? Yes, who is ready to read?
Economists understand by the market not any particular marketplace in which things are bought and sold, but the whole of any region in which buyers and sellers are in such free intercourse with one another that the prices of the same goods tend to equality easily and quickly.
So he also hints about equilibrium price, for which demand and supply parameters are enough. Geographical location or a marketplace as such is not mandatory. Do you remember the name of the economist who has given this? Shall I give some options?
Yes, ma'am.
Alfred Marshall, Professor Boulding, okay, A.C. Pigot, and David Ricardo. What are the names I gave? Alfred Marshall,
Holding,
Bowling,
Pico,
I should change the option now. Yeah, option D is correct, but in that place it should not be David Ricardo, it should be none of the given. I was very conscious not to mention the name, and yeah, option is none of the above actually. The answer is, yeah, see, Cournot. He is a French economist, very popular economist. His theory in market got very popular, and so this definition I want you all to remember. At least he was the one who inducted that change in common man's perception that Market is always a locality, a place, a location. So he was the one who gave this idea. No, look at this definition very clearly. We need not have a particular marketplace, right? However, in criterias, we will discuss one as geographical location. That's fine, but this is not a requirement because market means transactions for which buyer and seller, goods and services, bargaining power, price, final price is enough. Can you understand this? And this one is repeated as far as I saw. Elements of market. Have you taken it down? So what they will do, one will be an odd man out. You have to find out that, right? So if they give you geographical location, that is supposed to be the odd man out because these are the fundamental elements of market from economist point of view. Am I clear? And also this definition, have you taken it down? You have studied Alfred Marshall, Paul Samuelson, Adam Smith, and Lyndon Robbins with pictures, no? Likewise, Cornott also is coming to you with this photo. Have you completed? Can I go to the next slide? I'm finding still people writing. So you have completed. Yes. Please try these questions. Dash market covers a wider area, maybe a district, a state, or interstate dealing in durables, both consumer and non-durables and industrial products, including agricultural produce. Gold and silver are examples of commodities that have dash market. Very long period also is known as dash period. I mean, very long period or dash period. Next one, dash or dash market. In this market, transactions involve contracts with a promise to pay and deliver goods at some future date. We want both the names. It has alternative name, so we want both the names, right? Then perfect competition, that is PC, is an example of dash market. Dash market. Transactions generally take place between traders. This is a dash market. Based on the type of competition, markets are classified into A and B. So now try this, Phillips. Completed, huh? No. Finished, Sasidharan? Cost, you were little strong. Revenue is slipped. You slipped a little bit. Market. This is what I feel. Completed? I think till 12:30 you will be doing this exercise if I give you time. Have you prepared market structures or not? Yeah, somebody was asking me for question bank and market structures, no? How many questions are there? Yeah, I gave 105 questions. 7. Okay, now I'm going to release the key. Regional markets cover a wider area. Okay, you remember local markets, regional markets, national markets, and international markets. Second one, gold and silver are examples of commodities that have international market. Really, the value of all those are internationally fixed. Very long period is also known as secular period. Then which market is your payment for goods can be made on future date is forward or futures market. Both are allowed. Then next question was, what was the next question? Please read.
Perfect competition is example of
Is an example of unregulated market because free play of demand and supply. Okay, so perfect competition, that is a repeated statement which I found in scanners and all. Perfect competition is an example of unregulated market because free play of demand and supply. Okay, then the market where the transactions generally take place between traders is the wholesale market. The answer is wholesale market. Wholesale market is where the transactions generally take place between the traders. It is not trader to customer is retail market. Trader to trader is wholesale market. Based on the type of competition, markets are classified into perfectly competitive market or perfect competition and imperfectly competitive market or imperfect competition. Yes. So in 7, anybody got 7 on 7? 6. Okay, wonderful. 5. Great. 4. Not bad. Good attempt here. Have you all noted down the correct answer? Wholesale trade, make a note of it. Okay. And perfect competition is an example of unregulated market. Now, we studied this market form, segment A and segment B. You remember, segment A was the general classification of market, all types of market based on competition, features of each of them, examples, types, etc. In the second part, you have this equilibrium price output determination in major market forms. You remember, perfect competition, monopoly, monopolistic competition, and oligopoly. Others we didn't see, right? Now here, these are the kind of repeated questions. Please note it down. First one, two equilibrium conditions. MC is equal to MR. MC curve cuts the MR curve from below. They are the two equilibrium conditions. Repeatedly asked, how many equilibrium conditions are there? Okay, or given the two, they will give two conditions which and four sentences, out of which in one alone they will give you these both correctly. MC is equal to MR. MC curve cuts the MR curve from below. It's very, very important. Okay, repeated question on equilibrium conditions. Two equilibrium conditions to determine the price output determination, and they are those. And profit and loss situations are three situations using the two economic tools of average revenue and average total cost, AR and AC, or AR and ATC. So look at this. AR is equal to AC, and here we are talking about normal profit, which is also known as zero economic profit. When AR is equal to AC, it is normal profit situation, zero economic profit. AR greater than AC, supernormal profits. AR less than AC is loss or loss at minimum. Now, these three are important conditions to determine whether the firm is making profit or incurring a loss. An equilibrium condition alone will not give an answer to this, right? That's why when we draw the curve also, we learned like that. Equilibrium conditions, the required tools are MR and MC. And for profit and loss, AR and AC, okay? And in perfect market, please note, firm is a price taker, industry is a price maker. That is how the diagram itself will go. Stretch from industry to firm, isn't it? Yes. And equilibrium price output determination, questions will be for short run and long run. Separately, you should study short run conditions, long run conditions for all the three market forms. Perfect competition, monopoly, monopolistic competition. And oligopoly, you have only one thing, you have to study that, do it. Okay? Please take down these points. Have you taken it down? Once you have taken it down, have you finished? Okay. Yeah. Answer the questions which I am going to now type on the screen. Okay. So that I will get to know how you have understood things. Okay. Okay, have you taken it down? Okay, this page is permitting only me this much. Otherwise, I cannot type 350 questions here itself. Question generation happens like waterfall. Once you start question generation, no, you will see no end to it. I'm giving it in red. Can you see?
Let it be in the old color.
Old color. I want it to be bright to you. Old color is black. That's okay. Huh? Is it visible to you?
Can you put?
I have to put number. Why are you so lazy? Now is it clear? Isn't it? Okay. Number will consume again one space here. Space is cramped. On spot question paper set for you. Looking at your level of preparation, no? I'm thoroughly flattered. Today itself, I have to send market structures question bank. Every chapter, yeah, that is the thing I was discussing with them. Shall I tell you something now? So have you completed? Yeah. Fortunately, you don't have numericals here. On cartload of theory and some graphical representations. Yeah.
Identify what kind of
Market, whether or a supernormal profit or loss, that both will be the nature of the question. Elasticity of demand, elasticity of supply, cost, revenue, market structures. Mandatorily, you will have graph-based questions. So shall we try answering? Why are you so restless? 1 more hour you have to stay back. 1 hour, 1.5 hours. Learn in the class itself. As I used to tell you, no. Economics and all, no guarantee that you will go home and touch the book also. Even WhatsApp, you will not. Small brief notes and all I was sending, no. I'm 100% sure that you would not have seen it. So only I just chopped it and put it here. Okay, let's start answering. When there is product differentiation, it is a monopolistic competitive market. Monopolistic, not monopoly. If I make it small and write, we can write it. Okay. So it is monopolistic. It's not monopoly because product differentiation is a key feature of monopolistic competition. Please remember, product differentiation, key feature I told you, no, that is one. When firms organize themselves to fix price and make output decision, it is a case of
syndicate oligopoly.
sure, 100%. Okay, I will give the correct answer as usual. It is organized oligopoly. Syndicate versus organized. That's why none of the given. Syndicate is established. They will make. But in the absence of syndicate, we organize ourselves and we determine price output decisions. That is organized oligopoly. You remember we saw no collusive, competitive, and when a pure, impure, all those types. Yes, isn't it? Okay. Dash market was considered to be a myth.
Perfect.
Yes, very good. Perfect competition is the correct answer. When there is a registered medical practitioner and a primary health center in a locality, it is a case of pure monopoly.
False.
Why?
Monopoly.
Simple monopoly.
Simple monopoly.
That is a perfect answer because in a pure monopoly, you don't have even a remote alternative. You will not have any substitute at all. No substitute also. So the answer is false. Very good. The answer is simple monopoly. What are the three conditions of a pure market?
Large number of buyers and sellers, uniform and homogeneous price, free entry and
Yes, correct. Large number of buyers and sellers, uniform price combined with homogeneous product, free entry and exit. Correct. In the short period, demand determines price as supply cannot be altered.
true.
Why false? Can you tell me?
I mean, very sharp. But in short period also, demand
short
will
period also.
dominate.
It extends to short period also because only in the long period it will get adjusted. Okay, so very short period, long period, very long period. Very long period we don't take into consideration. In the long period, you can supply is adjustable. In the short period, it is moderately adjustable. Yes. In the very short period, you can't adjust it at all. So no adjustment, moderately adjustable, completely adjustable. Three situations. Okay, not adjustable, moderately adjustable, not adjustable, completely adjustable. Very long secular period not taken into consideration. Okay, so it is moderately adjustable. Okay. Non-price competition is a perfectly competitive model. State true or false. Non-price competition. False. Why?
We'll do that in, I guess, monopoly state.
Very good. Non-price competition is another name for monopolistic competition. That non-price implies that it is not price war here. What is important there is brand war. Okay, you are adding this ingredient, I will add. The difference can be real or imaginary. Each one is promoting. So, when you talk about non-price competition, it is not perfect competition, it is monopolistic competition. Non-price competition is an monopolistic competition where in the place of price war, what is getting primary is brand war. Okay, that is the answer. Financial instruments are examples of monopoly market. True or false? Okay. Why false? Why true? Financial instruments are examples of monopoly market. Yes, Vishal, you said you opened your mouth for once today and said true. What is the reason? Can you explain? Okay, you're coming at a public monopoly versus a private monopoly now. The answer is perfect competition. Earlier, perfect competition was considered as a myth, but later on experts said some, this financial instruments market, gold market, certain things you can bring under the category of perfect competition. So the right answer is perfect competition, not monopoly. Patent is an example of dash power in a monopoly
Legal.
market. Legal, yes. So many powers of monopoly we saw, no? They can question you on powers. Legal power. Okay. King's demand is based on Professor Dash model.
Sweet.
Full name.
Paul
Paul Sweezy. Correct. Repeated question. Okay. It is a case of pure oligopoly when products are differentiated. True or false?
False.
Why?
That is a different case. That is the opposite case. Differentiated oligopoly.
Yeah, differentiated oligopoly is impure or imperfect oligopoly. Pure is where there is no product differentiation. Remember, in an oligopoly, you can have a differentiated oligopoly and non-differentiated. Differentiated is impure, imperfect, and non-differentiated is pure. Okay, understand that? You remember collusive, competitive. Okay, yes. What is meant by full oligopoly?
No price leader. No price leader.
No price leader. Yes, do you all agree? No price leader. Is it the answer? Yes. So what is the name if there is a price leader?
Partial.
Partial oligopoly. Okay. So this is no price leader. Price leadership is a key feature of which market?
Sorry, I did not. What was the question?
Price leadership is a highlight feature of which market? Anyway, in the next slide, you're going to write the highlight feature of all the markets. That's the next thing you're going to do. I will do it. Are there barriers to, so full oligopoly implies there is no price leader. Okay. Are there barriers to entry in a monopolistic competition?
No.
Yes or no?
Yes.
Yes? Absolutely no. That is why brand war. So many brands can easily enter. No restriction at all. Advertising is required in a perfect market. You can answer this with an explanation.
False.
Why?
Perfect.
Perfect knowledge is there. Now, sometimes in correct and incorrect, they will give you that to make the customers or consumers aware of the product. For awareness sake, they can be advertising in perfectly competitive market. Okay, for advertising. It is not like what is there in monopolistic competition. Where no advertising is required at all is monopoly. So if you are getting that in perfect competition to create awareness, some limited, because large number of sellers are anyway there. So they have to create an awareness that our product is there. It's going to be homogeneous. So they'll not spend on advertisement, but to create awareness that I am there in the market. Okay, so that is there. And massive advertising campaign will be there in monopolistic competition. Okay, okay, that is the thing. So it's required in the market. You can owe an explanation. I gave you true or false. You require advertising for creating an awareness. For creating an awareness. Can you understand this question? Okay. In the next slide, before we go to the graph, I want to, what happened? You do one more exercise before. You do one small exercise. It's not allowing me to give you an exercise. Write the key features of different market. Please note it. Highlight feature. I will write down the name of the markets. Perfect competition. Monopoly. Monopolistic. You are going to write the highlight feature and number of players. Who are the players? Two questions you are answering. Highlight feature, the number of players, and who are the players. Okay. For all of this, at least till oligopoly, you can write the highlight feature. For perfect competition, monopoly, and monopolistic competition, you can write the highlight feature. And for others, the number of players and who are the players. This is the main point of English. Write it. Highlight feature, number of players, who are the players. Highlight feature for first three is also enough. And regarding players, number of players and volumes. Please write it quickly. It is on the term itself, so you may understand that very clearly. So before entering into the graphical segment, this is a bit important for you. Completed? Yes? Still doing? Okay. Time up. For perfect competition, what is the highlight feature you wrote? Highlight feature. Highlight feature. When I say highlight, that is the typical one. Highlight feature is pure versus perfect, where pure implies only three conditions. Perfect requires more condition to be met to be defined as a perfectly competitive market. That is the core thing to be noted there. Just writing the three features or any three features is not at all any of the market. First three features alone, pure. 3 plus others will be perfect. Okay. For monopoly, you know the highlight feature? What you wrote? Price discrimination. Because we have seen degrees of price discrimination, types of price discrimination. Do you remember that? Personal price discrimination, place discrimination, trade or use discrimination. Okay. So this is called as a highlight feature. So they will give you a highlight feature and ask you to know. Monopolistic competition. Have you written anything? Product differentiation is a perfect answer. So look at the highlight features. So the expectation from the examiner, though all the features are essential for running of that market form, still there is something as primary which is looked upon. So that is what we are giving. From duopoly, you have to say how many players and who are the players. Two players, that is one buyer and seller.
Two sellers.
Two seller market, isn't it? Two sellers are there. The players are, both of them are sellers, right? Oligopoly, few sellers. The term oligos is derived from which language?
Greek.
Sure, not Latin? Greek. Okay. Oligopsony. Very good. Factor market. This is a very important point you have to remember. Yes, for any doubts in market structures, contact Sasidharan. He seems to be doing very well. So yeah, isn't it? We all observe that. So commodity market is for oligopoly. So oligopsony factor market. Now regarding the players, who are the players? Please tell about the players. The characteristic feature of the. What happened? Yeah, these people are always giggling. Yes, Balasubramaniam. Yes, you only told, no, this factor market. Give the answer. Continue. Come on. Yes, anybody? Shreya, you know? Vishal? Yeah, Pavitra? Yeah, please. Few buyers. A very important point, no? Because buyers are not consumers. You and me are not the buyers there. Industrialists and entrepreneurs. Few big buyers. They are business people, but few buyers. And they are big buyers because they are businessmen who need to buy factors of production. Right? That is a point to be noted. Oligopoly is different from oligopsony because oligopoly is a commodity market. Few sellers are there and different forms of oligopoly will tell you whether it is differentiated or not. But in oligopsony, we are talking about factor market. So the consumers are not every you and me. It can be only businessmen. So the number of buyers will be relatively less. That is a core idea here. Monopsony?
Single buyer.
Single
Buyer.
buyer. Very good. Single buyer. And bilateral monopoly?
Single buyer, single seller.
Single buyer, single seller. Very good. Okay. Now, oil companies generally are example of which type of market? Oil company. Oligopoly. Very good. Automobiles. Oligopoly. Very good. Cosmetics. Monopolistic competition. Good. Okay. Precious metals.
Perfect.
Perfect competition. Can you understand that? So, according Indian Railways, how can we forget?
Monopoly. Monopoly.
Wrong answer. Public monopoly. Okay. So, understand that. Now, the practice of charging high price in the domestic market and low price in the foreign market happens in
Monopoly.
which type of monopoly? And it's called as what?
Right? Discrimination.
Discriminating monopoly. It is known as the practice of charging high price in the domestic market. In the domestic market and low price in the foreign. Everybody is smiling, man. You're all very happy about you, huh? Is called as. Smile is contagion. From 1 to 2 to 3 to 4. Give the answer. No. Let me see who remembers. It is an empirical example. It is a happening. It's not theory. Dumping. I charge low price in my, I charge a high price in my home market and high price in foreign market, isn't it? So it is dumping. Okay. Now, the last question here. Give the 3 degrees of price discrimination. You must give me the 3 degrees of price discrimination. Have you given? Who has completed the 3 degrees of price discrimination? First, second, and third. You know who has given the degrees of price discrimination? Excellent preparation. Monopoly market. How many you have in monopoly? Features, types of monopoly power, types of monopoly, degrees of price discrimination, types of price discrimination. Isn't it? Did we have any expert name given? Marshall, huh? You want to say? Sorry, he didn't give. It is Professor A.C. Pigot. Okay. Now, what are the 3 degrees? Tell me. I think Shalini completed that, no? This question? Okay. Now, what is that first degree, second degree, third degree? When the price is charged in such a way that nobody enjoys consumer surplus, it is price discrimination of first degree. Nobody gets any consumer surplus at all. Which means what? They go and make an assessment, a study of the sample society. So price is fixed in such a way that nobody gets consumer surplus. First degree. In the second degree, what happens? Now I've given the first degree start. I think second degree. All except the poor will get consumer surplus. Prices are fixed, which means what? Price that can be afforded by the poor people are fixed. So they will not enjoy consumer surplus. All others will enjoy. All but poor will enjoy consumer surplus in the price discrimination of the second degree, which means prices that can be paid or affordable by the poor members of the society is getting fixed. So I am able to pay 10 rupees for any commodity, and that is a price fixed. I am a poor member. I don't enjoy consumer surplus, whereas others will enjoy. Because they can afford 12, they can afford 15, they can afford 20. Can you remember that? Do you remember that example? So in the first case, nobody enjoys. Second, all except the poor enjoy. What about the third? Yes, it depends upon the demand in the respective markets. I think we saw one diagram where your supply was vertical line. Depending upon the demand, the prices will get settled. Higher the demand, higher the price. Supply will be the same, the vertical line, straight line parallel to the y-axis. But demand curve will be for market 1, DD1, market 2, DD2, like that. Accordingly, the price will be OP1 and OP2 respectively. So in the first case, no one enjoys price discrimination. In the second, all except the poor enjoy consumer surplus. In third, it depends upon the demand in the respective markets. Do you understand that? Are you clear? Degrees of price discrimination, don't forget that. Have you made a note of it? Now you are going to identify the market and also identify what? Profit or loss, both. So look at the graph. If I ask you to draw a rough graph, you must be able to readily draw it. Yeah. Don't find it tough. In the class, umpteen number of times we have been drawing and drawing and drawing. So quickly draw the graph. You know how to draw the graph. However, you don't have to draw the graph in the examination, so that is not a problem at all. So simply have the sketch before you. I just want you to have, just like that blindly, if you have the answer, how is it going to help you for revising? So have a rough diagram, draw it. You know how to draw it in the examination. I have taught you how to draw technique of drawing and all. Which curve will fix first, which we will do second. Of course, equilibrium condition, MC and MR, we have to fix first. Then depending upon profit or loss, whichever tool AR is above AC or AC is above AR or both are equal, we have to draw, isn't it? So you are going to answer the graphical parts now.
We should just specify it supernormal, normal loss or the
market also. Identify the market and identify whether it is loss or profit or supernormal
Not
profit.
able to identify it. Steeper or flat?
Okay, I will. How does it appear to you? Is it looking flatter or steep? Then take it flat. Take it flat. Done? Were you able to identify which market form? Profit or loss in both. This is a stereotype question. What else can they ask in this, no? Yeah. See, graphs in market structures should be in your fingertips. Draw a rough sketch and write the answer. Got it, huh? Both. Everybody completed? Know the answer? Finished? Akshay, have you finished? Very good. Shall I give the answer key? At least one rough, like a scribbling sort of a diagram should be there in your notebook to hint. If you blankly write the answer alone, what will you know? So have one rough sketch in front of you in the page so that you can mark the answer. Okay. Got it, huh? Okay, tell me what is the first one?
Loss.
Okay, loss monopolistic competition. Okay. Yes, you two people are conveying something else, I think. The smile and the look tells that they have some different answers. Yeah. Supernormal profit, you feel that way. And which market you feel? Monopolistic competition. Okay, there is a doubt whether it is loss or supernormal profit. We do not know. Next one. Is it? Next one. Do you have any term for this? Do we say it is normal profit, monopolistic competition? Are we taught to say like that? Don't we have something? Yes, it is definitely long run. The answer clue is also there. Zero economic profit. Okay. But there is something significant about it. Okay, let me release the answer key and see, check yourself. The first one is monopolistic competition, supernormal profit, where your AR curve is above the AC curve. Look at where is your AR? Sasidharan, AR is above AC, which is supernormal profit. Looking at these two curves, you must answer. Now, my dear students, this is AR equal to AC, so normal profit. But it is called as group equilibrium model as given by Professor Chamberlain. Repeated question in the examination, this one. So, it is a specific model given by Professor Chamberlain to define equilibrium price output determination in the long run in monopolistic competition. This much you have to know. AC is equal to AR is not a simple equation. It is derived given by Professor Chamberlain. Can you understand that? It's a unique thing. No, we don't call everywhere normal profit as a group equilibrium model. Do you remember where we discussed, Chamberlain says that In the short run, you are having a brand war, right? You can manage a loss. But in the long run, if you extend your brand war, what are you going to do? You sellers itself will be battling, and consumers are the winners. You give them some benefits, you give them soap, you give them offers, you give them discounts. What about your business then? So you have to come into some consensus. You remember artificial assumptions, challenging assumptions, heroic assumptions means what? We all will unite together and we will discuss and to follow some uniformity so that we can capture the market. This is an artificial thing. It is a challenge. No competitor in a monopolistic competition will agree to it. In oligopoly, it will happen. Among the few sellers, a cartel can happen, but not in monopolistic competition. It's a brand war. There, if you say all of you come together and be united, who will listen? I have superior technology, I have superior raw material. Each one will go for that. Can you understand? So, artificial assumptions were constructed by Professor Chamberlain to bring or to ensure at least firms in a in a monopolistic competition enjoy at least normal profits in the long. Can you understand this? So, have you made a note of these two graphs? Shall I go on to the next graph? Okay. Do the same exercise. Draw the rough sketch, identify the market and identify the profit and loss scenario. Both you have to give. Did you identify? First one you did. Huh? Second one, how have you taken this graph as steeper or flatter?
Steeper.
Good. Have you drawn the rough sketch? Are you able to identify the market given there? Okay. Yes. What is the first one?
Perfect competition, normal profit.
Normal profit. Oh. Second one. Did you
Supernormal
get it?
profit.
Supernormal profit.
In monopoly.
Imperfect market. Monopoly. We take it as steeper. And did all of you get this right? So supernormal profit because your demand curve represents AR curve. And this is your average cost. Right? Supernormal profit in a monopoly market. Right. So both the answers are there. So check your answers. I suppose you have taken it down below the graph, the rough sketch you have drawn. Go to the next one. This is very easy for you to find out. You have to identify only the market. Imperfect. Good answer only. Among that,
Monopoly.
do you find it steeper or flatter?
Steeper.
Steeper, relatively steeper
Monopoly.
only. So it is
Loss in monopoly.
monopoly. Loss in monopoly. Can there be loss in monopoly?
Yes,
Can a monopolist incur loss?
yes. In short run, you can.
He can,
In
Is
short
it?
run.
Why? Due to his wrong decision.
So if he incurs the loss, he goes down.
Yes, which is in the long run. In the short run, a monopolist can incur a loss. This loss is not because of him, but because business is a risky venture. Business is endowed with risks. On that grounds alone, there is otherwise he is quite strategic. It is not his fault. Sudden changes, no external policies, external environment, right. But he will not continue in the long run if the loss sustains. Can you understand? So the answer is monopoly. And here, please note it that a monopolist can incur a loss in the short run. In the long run, he will quit. He will not exist to have this problem in the long run. Right. Have you noted the answer? Is there a rough sketch for you? Which market and what scenario is depicted here? Which market, what scenario?
Normal profit in the long.
Normal profit in the long run. Okay, there can be normal profit in the short run, normal profit in the long run. So the scenario is long run. Okay, so yeah. So this is normal profit. Look at this long run, right? So that is the situation noted here. Yes. Have you taken it down? You have to identify the market form very clearly. Be very clear. Think before answering. You might miss out the correct answer. Got the answer? What is it? Okay. Yes, others got it? Are you able to identify the market form from this graph? Others? Others? Have we discussed the graph in the class? What is this?
If he changes the price from others in the market, if one player changes the shows product in price differentiation, so it will be falling.
And what is the answer you gave? Oligopoly. Oligopoly is based on kinked demand model. This is called as a kink. The R curve has a kink there, a bend. It's not the flow, smooth flow. And MR will be discontinuous. Actually, there will be a break in MR also because of AR.
No gap. There should be a gap.
Yeah, there should be a gap, which is shown as like this. These are different ways in which they are showing. Models are there. Now, please note it, my dear students. This represents elastic portion. This represents inelastic portion. So, the elastic portion, what does it imply? When the oligopolist, when he reduces the price, or say when he increases the price, what will happen? When an oligopolist increases the price in order to make profits, the other oligopolists, they will not increase the price. So from him, his customers will go to the other people who have not raised the price. Elastic demand. Whereas when he lowers the price and expects more people to come, everybody lowers. So nobody comes, which is inelastic. Can you understand? There can be a graph-based question in oligopoly. That is why this model is shown to you. King to demand curve given by Professor Paul Sweezy. It talks about price rigidity. This reveals about price rigidity, and here elastic and inelastic prices are shown. Okay, so price rigidity is a key feature here, which is illustrated. Will I be able to write it here? Price will be fixed. He cannot lower it. He cannot lower it. He cannot higher it. Can you understand it very clearly? Yes. Have you noted it down? All of you? My dear students, now quickly look at the models. They might ask you models. Let me give you the key feature. First one is Cournot's duopoly model. I want to ensure and highlight the feature alone so that you can take the highlight feature. Please make a note of it. Cournot's duopoly model. According to Cournot, each duopolist believes that regardless of his actions and effect upon the market of the product, the other firm will go on producing. Though it is a two-seller market, it is a belief in duopoly model that the other person will continue, go on producing the same commodity because he has his own criteria, defining criteria. That is Cournot's model. So each one will be an independent player. That's all. So what does it say? The duopolist believes that regardless of his actions and the effect upon the product, the other firm will continue. Independent players. The two oligopolists are independent players. Okay. Now go to the second one. That's what I want you to know, not extensively, because very rarely asked. Independent players. Okay. Now Stackelberg duopoly model. So here the producer under this model, he incorporates the decision of his rival. It then incorporates its own profit function and maximizes profit. Now what is the Stackelberg's model is? They are not independent player. If there are A and B, B notices the decisions of A, and to his decision he borrows, he takes it, he emulates and adds his strategies so that he can maximize profit. So he is not completely indifferent of player A. He considers his decisions also. Plus he adds his strategies and runs the market in a profit maximizing behavior. So it is not an independent one. He draws input from the other players. So in Stackelberg model, we can say that he draws, a rival draws inputs, incorporates a decision level. So he draws inputs, considers, accepts, however it is, the other's decision or strategy, but definitely he adds his uniqueness to it and makes profit maximization. Okay. Then Bertrand. Now Bertrand model is said to be similar to Cournot's model, but in case of Bertrand's model, the former is based upon price as a strategy variable. Bertrand says you do independently like Cournot only, but your key focus should be on price. Price strategy. Price is a winning thing for you. So price strategy. So according to this model, each producer can always lower the price until price equal to cost. So use the price as a strategy and keep on lowering it because people are attracted by low price. But one thing is, it should be at least equal to COP, cost of production. So there is a similarity between Bertrand and Cournot's model because you play independently. Whereas Bertrand goes a step further and says that use price as an effective strategy. That is a winning model. Okay, takes price as a tool to become a winner in the market, right? Edgeworth model. Now here, Edgeworth model believes that each duopolist believes that his rival will continue to charge the same price as he is just doing, irrespective of what price he himself sets in. No determinate equilibrium can exist under duopoly. So each duopolist believes that his rival will continue to charge the same price as he is just doing, irrespective of the price he himself sets in, which means what? Both of them will be similar on prices. It will not be radical difference. They will say price strategy is there, independent strategy is there, but my price and your price will go more or less the same, because if one is different from the other, one is bound to be a loser, the other is bound to be a winner. So more or less, according to Edgeworth model, there will be, I will set a price for my product, but both of us product prices will be more or less the same. A and B will be having a similar price path. That is what Edgeworth is saying. His rival will continue to charge the same price as he is just doing. Okay, he will not be bothered about the price he himself has set. What the rival and A and B are doing will be more or less the same, though each of the player will have their own independent price. And collusive oligopoly we have already done. It is an opposition to competitive oligopoly. They don't want to take to competitive means because it will be an endless battle. Collusive is colliding, coming together. So here we are using the term, so look at it, cartel. Coming together. Collusion is coming together. Not competing, not seeing B as an opponent, but seeing B as a member. So it is a kind of group, forming group formation. Cartel is an example of group formation. Can you look at the names? Cournot, Stackelberg, Bertrand, Edgeworth, collusive. Right? Please go through these models. It will be very useful for you for the examination. Have you taken down these? At least the hints in pink one, no? Given independent players and others' decision, or incorporates and accepts a decision of the rival, and he will follow his own strategy also. In Bertrand, we found that price should be the strategic tool, and Edgeworth model will be both A and B will go similar on prices, though they will be setting up independent prices, right? And collusive oligopoly is as against competitive model, where A and B will see each other as strong rivals, but in collusion they will be joining together. Got it? Do you need a break or I'll continue? Did you go through the pricing strategies which was given? Did you see the pricing strategies which was given as a PDF? No. So today I told you, the class will go up to 1, 12:30 to 1 I kept, and it seems it will be 1. At 1 dot I will stop wherever we are. Okay. So do you need a break or shall I continue? Break you need? Okay. So it's 12:20. You will come back at 12:30. Remember, the more time you take, the more time you have to stay back. Be strategic and wise.